Says it's just setting it up. We should be good. All right. Yeah, we are good to go. We are live, everybody. Sweet. Well, I'm excited for this little convo. For everybody who's new to our community, who hasn't come to a meetup before, I know we've had a lot of growth in our reinvestor communities over the last couple of months. You know, more people hanging around a laptop these days than actually working in an office, which has been great because a lot of great conversations taking place. And so Randy and I just wanted to take a few minutes and invite our sponsors of our meetup to come and participate in just a general chat and convo with you guys, and give you guys the opportunity to see the types of professionals that we want to give to you guys, and the expertise, the high level of expertise when it comes to real estate investing. We work with what we think are the absolute best, and here is a great opportunity that hasn't been done before. We've never had all of our sponsors, or a bulk of our sponsors anyways, on one given call. We haven't done it at a meetup really before, the live in-person ones, and this is our first go at it. Unfortunately, Kyle Green and Sean couldn't make it. They had a last-minute appointment they had to jump onto, but we've got an excellent panel for you guys here tonight that we're going to kick off here. For everybody who's on the live, say hi, tell us what you're up to. We've got Kyle Kerr, who is a realtor here in Victoria. We've got Megan Becker from Century West Financial, also from Victoria. Sarah Elwood from Sitka Law here in Victoria. And then we got our distant relative in Toronto, our accountant, Dave Putin. All these lovely faces are just an excellent piece in our team, and I'm super thrilled to have this conversation with you guys today. So welcome, say hi.
Hey.
Hey, everyone.
So I have a bit of a format that I want to run through, but before I kind of get into some of the questions, I want to start just by offering you guys an invitation to just say hi, who you are, what your area of expertise is, and then just drop a little bit of gold on us and the people watching, a tidbit of a tip into real estate investing and stuff. So Sarah, let's start with you. Who are you, what do you do, and what's a tip you can give real estate investors these days?
Perfect. Thanks, Steve. So as you mentioned, my name is Sarah Elwood, and I'm with Sitka Law Group here in Victoria. We're a multidisciplinary firm, but my areas of practice focus predominantly on real estate. So the standard convincing things, whenever you buy, sell, or refinance, you usually have to go through a lawyer or notary. So we're here for that. And the other part of my practice that I really focus on as well is with the development side. I actually just had a couple subdivisions in Souk finish up this week, and I've got a few more projects in the go. Anything from someone who's required to put a covenant on title to satisfy a municipality, to somebody who's doing a townhome development and needs to do everything from the disclosure actual sale at the end. We can do that. So that's the majority of my practice. I still help clients with things like incorporating. Some people like to hold properties in corporations. We can do that. And then for those of you who have to think about the inevitable, we also can help out with things like wills and estate planning. So we do try to cover everything that the average person has to go through in the course of owning, selling, disposing of, and inevitably leaving behind some property. So that's the main area. And you're asking for a nugget of gold, which I feel like I can try to do that for you. One thing I do want to clarify right now, because we are in such a is just with regard to correcting misinformation for signing. When you're signing the actual transfer document, so either signing as a seller, signing as a buyer, when you sign documents with the law firm, you do still have to sign in person. There are some small exceptions we can try to fit you in, but generally speaking, even with the COVID-19, the Land Title and Survey Authority has come out saying, we can't do virtual signing. Is obviously concerned about health and ours, as well as trying to take steps to protect clients. But they're also very concerned about fraud. So people will find that, unfortunately, I have had clients ask if they can DocuSign their purchase documents, and the answer right now is still no. We do have to have that done. If anyone is in a terrible circumstance, we can try to figure out there's some very narrow exceptions that we can do. I had to do one this week for a client who's unfortunately wasn't able to due to their son having recently undergone cancer treatment. So again, someone you really don't want to have risk in getting sick. But there's a lot of misinformation out there right now. So there have been some very clear directives. I was on a chat with the director of the land title office just a couple weeks ago, and he made it very clear that virtual signing, virtual commissioning, we're just not there in British Columbia. And if anything, we're looking like we're going in a positive direction. So they're probably not going to about face on that.
Gotcha. I was kind of hoping that this would be the trigger point that would push BC into to being completely digital, but maybe I'll wait for the next pandemic, I guess.
Yeah, we'll see.
Awesome, Sarah. Thank you. How about Megan? I think a lot of us already know who you are, but for the 50 to 100 people that are new to our group over the last month, who are you? What do you do? And what's a little drop of gold for us?
Well, I'm Megan Becker, and I'm with Century West Financial. I am an independent insurance and investment advisor here in Victoria. Little nugget of gold. Let's see. There's been a lot of changes in the insurance industry, so I don't know if it's nuggets of gold, but if anyone needs coverage right now, they're not doing medicals, and they are taking everything by a DocuSign. You might not be able to do it with Sarah, but as far as we are concerned, that is a transition they have done very quickly. In the insurance and investment world, they don't really move quick ever. So it's been a nice, I guess, change. And for the people that don't know me, something I guess that like kind of sets me apart is I'm an active real estate investor myself. And I've been able to incorporate more real estate planning into people's overall comprehensive financial planning. And I've seen just the great things that real estate can do for people. And I just think that's a little bit of a unique feature to find in a financial advisor.
Totally. That's easily one of the main reasons why we've had such a great relationship and work in partnership over the last couple of years, is because you get it. And not only do you just get it, but you get it to a point where, because you have this huge foundation of just finances and insurance as a generality with the profession, but you can also speak really well into the real estate investing side of things. So I know you've helped a lot of our community figure their life out, and so thanks for that. Mr. Accountant, David, it's good to see you, my man.
Hi.
How are you? Who are you? What do you do? And what's a little piece of gold for us?
Sure. David Putinen is my name. I'm the tax manager, one of the partners, the managing partner here at RealFile CPA. We're a cross-border tax firm with clients all across Canada, obviously all the way out to Victoria, and all throughout the United States as well. So our firm focus is real estate, whether it be builders or investors or contractors or income property owners. I'd say 80% of our clients are in that sector or in that industry. And although we do have clients all across the gamut, and some of our restaurant clients right now here in Toronto, I don't know if they're all closed right now in Victoria, but it's pretty dire, and it's a scary situation for a lot of people. So that's who I am. Nuggets of gold, and they're all kinds. I was out to speak to you guys in February. Did I come in February? So we started telling our clients, we started telling our clients in January to sell your stocks, get rid of your stocks, because the market's going to crash. And I came and I spoke to your group in February, I said, get rid of stocks, the market's going to crash. And what I'm telling people now is get rid of your stocks. The market's recovered, so you may have recovered, so get rid of them again. Hang on the side for a while. So there's one nugget. But for real estate investors, right now, there will be, I think, a great time to invest during this period and going forward. It would be nice to have some cash in a trunk ready to pop onto real estate. So That's why I'd suggest maybe sell your stocks while you may have recovered and take a chance on some more real estate in the near future. Thank you.
I love it. I was lucky enough to take that advice, and like the next day, everything went sideways. So, awesome,
So
man.
you caused it.
That's so well. No. Kyle, dude, welcome. You're our newest sponsor of the group. Super excited to dive into our second discussion later today on the market itself. But who are you? What do you do? And what's a drop of gold?
Yeah, thank you. And I guess with Kyle Green already being around, I'm Kyle number 2, I guess. Is how we're going to deal with this. So Kyle Kerr, associate partner with the Prime Real Estate team. So we're a full service, mainly residential, but we do some commercial, more on the multifamily, and still kind of a residential focus, even on the commercial side. I've been licensed for 10 years. My business partner, Tony Joe, has been licensed for 30 years. You probably recognize him from CFAX radio shows and lots of work around the community. We also have 2 other agents who work full time on our team as well. And then we have 2 admins. So we're a full service team. We like to be a team so that we can give our clients, full service. I've worked with everything from first time home buyers to seasoned investors, working on development projects, buying properties to turn into stratas, all kinds of different things that I've worked in over my time. I also served on the Victoria Real Estate Board for 7 years, and I was president of the real estate board in 2018. So I feel that's given me a lot of really extra insight into especially how government and economic policies can have an effect on the local real estate market, or looking at those opportunities maybe outside of Victoria. And I know we've talked about that before, that sometimes the best place to invest is in a different city. I've got a lot of great connections across Canada, and I try to stay in touch with those realtors regularly. Maybe there's a great deal in Saskatchewan right now, or in Nova Scotia. And so trying to provide my clients with, holistic kind of real estate advice. And generally when we see trends in other areas, those can come back to Victoria. And so we like to kind of understand that. And so always happy to help people on all spectrums. And, even if I'm tied up with something, I have the team for that support. And a nugget right now, I kind of like what Dave said about having cash ready on hand. I know we're going to talk a little bit about pricing and the future of the market. I think right now, I'm not seeing that many crazy deals out there yet, but I think they'll be coming. And as many of probably the viewers are watching right now, if you're a landlord and you've got tenants that can't pay rent, of course, there can't be any evictions right now because of the moratorium on that with the emergency order in place. But I think once those emergency orders are lifted and the dust kind of settles on who was paying rent and who wasn't, I think there's going to be an opportunity where some people are going to have to liquidize 1 or 2 of their assets to get some cash flow going again. And like Dave said, have some money in the bank to offset any future reduction. So I think getting yourself primed, working with someone like Kyle to have your mortgages and everything lined up, and be patient right now, but be ready to pounce on something when it comes up.
Yeah, couldn't agree more. If you've got a trunk of money in the back of your car, you're you're in a good position.
Yeah. Because the deals aren't going to be always super visible, but when they're there and you find them, you got to be able to jump, because there's lots of people out there right now looking for deals as well. So it's not just a small portion. There's still lots of people ready to buy.
And cash could come in the sense too of talking to Kyle Green and getting a HELOC, and just leveraging the appreciation that you've seen over the last 2 or 3 years to be able to pounce quickly, like you said. And I think we'll get into that a little bit deeper into this convo or our next one for sure. But Sarah, I wanted just to kind of along those lines, actually, this is a perfect segue. Say in 6 months or something like that, we do start seeing deals pop up and some owners be in tighter positions. And I think we might see a bit of I won't even call it a spike, but an increase of the amounts of foreclosures, possibly depending on what happens. But foreclosures here are not the same as what you hear about on podcasts and stuff down in the States, where it's like, yeah, you walk in the door, you slap 20 grand down and you buy a cool house, right? That doesn't happen here. Can you tell us how we in Victoria can find a foreclosure, and what that process kind of looks like?
I can speak a little bit to that, but I also think Kyle might be another one to touch on this subject, because like you mentioned, it's not some sort of like registry you can go in and find. It is public it's a public process. So the going through the process of foreclosure is public. If you wanted to, you could sort of trawl through the course each day to see what sort of actions are going. But at the end of the day, the bank becomes the owner and they end up selling that property. So usually they just end up in the same pool as everything else. It's on an MLS posting and it gets listed as a foreclosure. So unfortunately, there's no sort of secret, as far as I know, there's no sort of secret hidden registry for all the foreclosures anywhere you're going to get a deal. But Kyle could speak to that perhaps. But in terms of the process, and it is a bit different. You do have the offer that you put in. So the judge has the chance to review the offers that have been put in on the property. You don't get a chance to know what anyone else is doing. And they can outright reject all of them if the judge doesn't think it's fair or reasonable, because at the end of the day, the judge is looking for what's equitable and does this pay out anybody who has an interest appropriately. It can kind of just keep coming back in circles potentially in that circumstance. So you do have to be ready to pivot. Quite the same as negotiations. Typically, you can have a little bit of back and forth with a normal seller. You don't get that chance.
So basically what you're saying is it's very hard for us to get foreclosures in this market. And even if you do want to get something on discount, the judge can say, yeah, you know what, that's actually not fair. I'm not going to give you that much of a discount on this property. Take it or leave it kind of thing.
You don't know who else is putting an offer in. So you don't have a chance to know if there's any offers or if they're better than yours.
Tough game to play.
Yeah, I can jump on that quickly too. As Sarah said, the main point is it's like the US where they have short sales and the bank can just sell it for maybe whatever's left owing or whatever they find equitable. The court system here is to protect the seller who's been foreclosed on. So they don't want it being sold as a fire sale and where there was equity or value that could have still been received, because sometimes it's not someone that's over leveraged. It's someone who might have lots of equity in their home, but they've lost their job and they just can't make their basic mortgage payments any month. So if they bought the house and only have $250,000 left on the mortgage and it's worth $600,000, that homeowner could still end up getting a bunch of equity after. So the courts want to make, and as Sarah said, I've been in a court proceeding where the judge has looked at the offers and said, I was the list agent. And we had been on for 30 days, but the offer came in, it was about 70 grand below the asking price. And the judge said, I don't feel this home has experienced enough time on the market. We think it's selling for too low too quickly. And unfortunately, actually that house ended up sitting on the market for another 3 months and sold for less than that original offer. So they thought they were protecting the person, and we ended up selling for about $15,000 less in the long run. But the judge made that decision that she felt things were moving too quickly. So you're not guaranteed a screaming bargain necessarily. And you deal with the fact that you have to take that home on an as is, where is basis. The bank won't negotiate with you for anything you find in an inspection. You do an inspection just to make sure you actually want to buy it, but you don't get a chance to renegotiate. They'll just tell you to kind of get lost.
Yeah, so no secret sauce, no cheat sheet to it. It's just instead of finding stuff that might be 30, 40, 50% on off that you would down in some states, you're maybe finding something that's 10% off. And unfortunate, but it's the rules that we play in BC here. But definitely still something to have on your, the front of your mind is like, hey, if people are going to be in these type positions because people have lost jobs and stuff, how can I create a solution for you? Maybe it's like a seller financing thing. Maybe it's, the act of foreclosure where, you can get a 10% discount where we wouldn't have seen that, 3 months ago. And, I think we are all in the same boat in the sense of, Victoria's going up. So, Sarah, I know you have to hop off real soon. Did you have any other things that you wanted to say to everybody, or?
No, just wanted to thank you guys for the opportunity. If anyone has any questions that came out of this or unrelated, we do have our emails on our website. So it's sitkalaw.ca. Feel free to hop on. Let us know if you have any other questions.
Awesome. And we'll put everybody's contact too in the Facebook post, so that if you do want to reach out to some of our sponsors, you have that direct convo.
Excellent. Thanks, you guys.
Thank you, Sarah. P.S. We've worked with Sitka closely on lots of different things, whether it be wills and stuff or corporation setups, closures, etc. Really great staff, great customer service, great intelligence on real estate. Highly recommend working with them if you can. Megan, I know that you're just starting or midway, or in the starting phases of a new cool deal and a new build. I think there's lots of development going on. I think it's a space that a lot of us are quite interested in. Can you tell us what that deal looks like, and then a little bit about how you structured the partnership?
So it was a while ago that we actually put our initial offer in on the property. There was some back and forth because a lot longer for them to get their civil addresses when they were trying to subdivide it. But there is a partner and I have a few lots in Fairfield that we've purchased, and they actually just started digging on Monday, which is super exciting that they started digging. I don't know if this is the market that I want them to start digging in, but it's par for the course now. So now we just have to kind of move ahead as it is. So we both, the partner and I both have real estate or corps that we are doing it through, and we got commercial financing for the properties. We did have a substantial amount of cash that we used to purchase the lots. So we ended up getting the commercial construction financing for the builds. And then we're just sharing, I guess, the ownership rights between our two corps. That way, hopefully we can do this time, and then any money that is made will just get funneled into the next opportunity. So it's brand new area for me. I've wanted to get into development. I didn't envision that I'd be building like a $1.7 million house in that price range for our first go, but that was the opportunity that came about. We had a really hard time finding dirt for a good price here in Victoria. So my fingers are crossed that maybe at the other end of this COVID, there may be a little bit more affordable dirt available, but we'll see.
Right on. That's exciting.
Mm-hmm.
With the commercial financing, I guess you have the lot outright or close to, by the sounds of things. So are they giving you a draw up front, or when's your first draw come?
The first draw will come, I think it's at 25%. Like once, yeah.
So foundation and stick, pretty much.
Mm-hmm.
Nice.
Yeah. So we have just the personal ability. We have some line of credits that we're using to float us until we get those draws. So
nice.
That's how we were able to make it work.
What's the learning curve like jumping into new construction?
From just buying pre-existing, it is pretty much like straight up since I know nothing. So we've bitten off a lot. I'm thankful that the partner that I have has done builds already. So I'm kind of siphoning off of her knowledge. Mm-hmm. So that's made dealing with the city and things like that a lot more fluid, since she's already dealt with the city of Victoria. We have a little bit better idea of what to expect in terms of how much permits are going to cost, and what even in terms of coming up with the initial budget to take to a construction, to get the construction loan. So we were able to kind of mimic what she had done previously to kind of estimate what our build cost was going to be on this property.
Would you have done this deal without this partnership? Without having somebody on the other side that has gone through and has that experience?
I wouldn't have done a property of this price point. No. Mm-hmm. No, I would not have. She has that experience. So in my opinion, there will be fewer mistakes made. Whereas if I was doing this on my own, just without the industry knowledge, there's going to be mistakes, and then those mistakes add up. So at a price point like this, and when you're really dealing, the margins are not insane that a lot of people just assume that there's going to be oh, they must be making 500,000. Like the margins aren't astronomical like that. So you really do need to be knowing where all your money is going to be able to keep the profitability there. So at this price point, I think I would have shied away from it and definitely looked at something maybe more around a single family home with a suite, maybe like a Langford build, so under $1 million-ish. So
yeah, the value of partnerships, right?
Yeah, absolutely. She has a ton of value that she's bringing to the table, and I'm very grateful that we have a good relationship, and that hopefully this project goes really great and we can continue to do more in the future.
Yeah, we are doing this 12 lot subdivision on Salt Spring, and have partnered with a developer, and not just like paying the developer as to build it, but actually partnered with them so they have skin in the game for one. And they've done multiple situations like this, and we're really leaning on their expertise, and we're bringing our own expertise to it. But it doesn't have to be a new construction or development or anything like that. But this is where the value of joint venturing even takes place for an income property, right? You might have a skill set of, I've got money, and Kyle might have the skill set of, I can find a great deal. Great. Well, let's put these things together as partner on a property and leverage each other's positions and skill sets and build a relationship together. And partnerships have drastically improved our business for one, but also you get to learn so much more through partnerships and having this intimate dialogue between each other, that you're constantly just like elevating your own level of expertise. And so now, after this one, once you get through this whole process, maybe you're looking for a second one or third one, or maybe that just pushes you into, okay, what's my next challenge? Right?
Yeah, absolutely.
Jump into building.
You don't know what you don't know, right? So, and you can be really apprehensive. I actually had a call with a client this morning, and we had the discussion around the idea that people being so apprehensive about starting things unless they feel like they're at the expert level. So instead of ever getting started at all, they just like keep putting it off almost as an excuse, but they feel like they need to know everything before they even start. And I think that can actually hold you back. I feel like hands-on knowledge has always been the best way that I've ever learned. Yes, there's mistakes made along the way, but the gains have always far outweighed the losses in the end. And I think jumping in feet first, not in everything, but you're kind of forced to make or break it. So I think you put a lot more effort in, maybe.
Yeah, I think it's like you said, it helps you move into new areas. I think it limits a lot of your risk, and 50% of something is a whole lot better than 100% of nothing.
Yeah.
Dave, I got a question for you on the accounting side. I know a lot of people in this community and a lot of real estate investors, because of the entrepreneurship that kind of comes along with it, are also small business owners, whether it be contractors, or maybe it's just investing is the number one business. Maybe it's they have a local shop in town or something like that. With everything that's going on, I know there's a lot of relief coming to people. I just saw like earlier this week or last week, I think it was maybe, that there was some new relief coming for small business owners. Is that something that you're dealing with a lot right now? Is it easy to get for us? And would you recommend it to everybody? Or can you talk a little bit more about that?
Yeah. So Megan, I was making notes furiously because you said a bunch of things I really liked here. So I appreciate the question. I'm going to answer the question, but I want to talk about all kinds of other things that Megan had brought up because they're so wonderful, especially, just taking action. And the people who are successful, I find, are the ones that are taking action. So I just want to get that while I wrote that down. I thought that was so important. Not necessarily the people who are going to spend the longest planning, but the people who sometimes just say, heck with it, let's just go. Let's get something done, rather than sitting on the sidelines paralyzed by the decision. Now, questions? Yes. Our advice to people is, if you have a corporation, go out and get your free $40,000 from the government. Free $40,000 from the government for your corporation. All you need to do is pay yourself a salary in 2019 of at least $20,000. You might say, but I didn't make any money last year. You can still pay yourself a salary from your corporation. You might say, I don't have a payroll account yet. You can call CRA and open up a payroll account retroactively and file a T4 slip for 2019 for $20,000, and you can avail yourself of the CEBA, the Commercial Emergency Benefit Account, which is a $40,000 loan, 10,000 of which is forgivable if you meet certain criteria. So that's the first thing that every single person who has a corporation, and if you have a 3-company structure, a parent company, a management company, a RealCo, all 3 of them could essentially apply for. So do that. Yes, that would be an absolute certainty, in my view, for anybody who has a corporation. Go off and apply for that. Now, there are other opportunities out there. This is what we've spent so much of our time on this last little while, is all the various loan and benefit programs that clients frankly need to be able to navigate this period, this very challenging period. The emergency wage subsidy that just came out, you can get up to 75% subsidized essentially by the government if you meet certain criteria. The criteria is much more stringent for that. So you can't retroactively create a payroll account. You can't retroactively do a bunch of things for that one. But there are programs out there. And yes, $40,000 is the CEBA loan. If you have a corporation, there is no reason why, even if you've already filed your tax return for 2019 and didn't report the money, go back and amend your tax return to report the money that you will have received on that T4, then file the T4 summary for the year, or vice versa, in that order, and then apply for your loan, okay? This is not doing anything nefarious. This is fully within the groundwork that's been written up for the rules. It's a loan that you will have to pay back if you don't meet certain criteria. It's a 0% interest rate, but $10,000 is forgivable if you meet certain criteria, okay?
That's pretty freaking awesome. With that 40K that you can get, are there guidelines that we have to spend it specifically like on the business or payroll or anything like that? Or is it just like, here's 40K cash you put in your bank account and now?
Right, so yeah, absolutely. So it's got to be spent on normal operating expenses. You can't take the $40,000 and then pay yourself a dividend from the corporation. That's not permitted, all right? But for example, salary is one of the permitted uses of this money. So you could take the $40,000 loan and pay yourself a salary. Now, the 75, here's the big distinction between this 40,000 and the 75% wage subsidy. The 75% wage subsidy is only going to be given to you for arm's length employees, okay? In other words, you can't be an employee of your own corporation and avail yourself of that 75% wage subsidy. But there's no criterion that arm's length employees don't qualify under the $40,000. So as long as you're using it for rent, for mortgage payments, for utilities, for payroll, that is an approved use.
Gotcha. The bulk of that, what I got out of that was, if I own a corporation, I need to talk to you pronto.
There you go. That's I always talk too much. You're right. I should have just said that.
Chris just commented on Facebook and said that he's going to reach out to you ASAP about that $40,000. So I have a feeling you might get a few of those.
Good.
Yeah.
Good.
Right on, Dave. Thanks, man. That was awesome. Mr. Kerr.
Yes.
We watching this video, we are all real estate investors. We're all sitting here going like, what the heck is going on with the market? Is it taking a dip like, a lot of headlines suggest? Is it, we just went to market on a flip, and that we got into multiples, and we have an accepted offer for above list. So where are we? But I want to specifically ask the $1 million question, and to tackle the fear right head on. Are you seeing prices dropping in Victoria? And is there a particular part of Victoria that you would see deals coming quicker before other areas?
Yeah, no, great question. Kind of answering it 20, 30 times a week. I would say so far, we don't see any hard data yet that shows that prices are doing any significant movements yet. Now, there will be the odd outlier sale that, I don't track every single transaction that happens, but there are people out there that we know of that are in positions where they have to sell right now. And a lot of that is people who were already in a financial tight position before COVID hit. And then this is just, kind of multiplied that. So, but I think what we will see is as these months continue to roll on and, mortgage deferrals start to expire and, landlords and tenants, not being able to make rent and those situations, I think we will see prices reduce in some regard only because we're going to go into a global recession. There's no way that we don't see some depreciation, but we were coming into this market in a, getting more and more into a seller's market again, kind of like we saw a few years ago. And you guys just had that experience, obviously, in Duncan. But I think like I said, as this market unfolds, we will start to see prices dip a little bit. I don't know if it's necessarily by the area of Victoria that we'll see it. I think it will depend on the property, the type of property and the price point. So I think, again, the luxury market or the higher end of the market will continue to see depreciation just because the numbers are bigger, financing's tighter, global money is not going to be moving around as much as it normally does because of lack of travel and global investments being shaky in many other countries as well. And I think that will also be seen at what I call the higher price point of a given property segment. So those one-bedroom condos that are bread and butter for your average, first-time home buyer or downsizer, those at the more affordable or what I call the attainable end of the market, I think will stay pretty steady. Maybe we'll only see maybe 5% reduction in those prices, but that's because government workers, nurses, teachers, contractors, military personnel, all of those people still have very stable jobs. And if they weren't in the market before, they're now seeing this the next few months as a great opportunity for them to get into the market and buy their first principal residence. So, and then same with single family homes with a suite under 900,000 in the core, like those are still selling within a few days. I was just actually in a multiple offer scenario this week. And my client's an investor from Vancouver, and she wanted to pick up another rental property here. She owns a couple in Vancouver. Place was listed for $640,000. It was a townhouse in James Bay, 4 beds, 2 baths, listed at $640,000. 2 weeks on the market, it dropped $20,000 to $619,000. We wrote an offer below asking price. We felt it was worth less than $600,000, and we ended up going into competing offers as well. We ended up losing out, and then my other colleague on my team, she wrote an offer on a property last night. She texted this morning that she's going to be going into competing as well. Mm-hmm. So there still is strength in this market. And as Megan was talking about, and there are people that have equity and cash right now that are going to look at taking advantage. So, but when I go back to those 1-bedroom condos, now the brand new construction and kind of those higher end, like the 1-bedroom condo that's over 500,000, I think we'll see those types of property prices come down more. Because again, if our market becomes very, very hyper local, it's what can local incomes afford to pay? And so, if Kyle was here, he could probably run through those numbers pretty quick. But if you take your, a government worker and a nurse and their joint income, those people will be able to afford that. But most of them aren't looking for a $525,000 1-bedroom condo. Mm-hmm. So I think those will be some of the segments. And then, as I said earlier, I think some of the revenue and investment properties where maybe someone has a few too many and they miss out on rents across a few different properties and they need to sell off 1 or 2 of those assets to liquidize. I think those will be some great opportunities for people to get a good deal, because you probably have tenants being evicted, landlords who just want to sell the asset. And so, it'll be interesting to see where those numbers go based upon where rents go in the future as well. Mm-hmm. But if I look at I just quickly pulled up some stats. So there's 103 sales over the last 7 days. And the average ratio of sale price to list price was still 97.6%. So even in the last, week, prices are still somewhat strong compared to the lowest in that 103 was 81% of list price. But it's hard to justify what that list price was. That list price might have been high to begin with, but so we're still seeing things hold tight for now. But I think once all the stimulus wears off that Dave was just talking about, that's where the real proof will be, is who can still afford to pay for things once there's no more free money.
Yeah.
On that topic, let's just chat with Dave quickly about it. as an accountant, when you have clients that own a bunch of investment properties and are, maybe highly leveraged in certain areas, and they're maybe not seeing rents come in and things like that, as an accountant, what are you advising them to do? How do they get through this without losing their properties? Or what are you advising for people that are in those scenarios where it might be highly leveraged, that aren't getting rent in right now, that can't necessarily supplement?
Right. Well, so I think the last stat I saw was somewhere in the neighborhood 90% of people paid their rents in April. Okay. So it hasn't been a problem yet. Not for the residential tenants. Commercial is a little different. The May figures, obviously today we'll find out what's happening. The commercial property owners we know have already, on our advisory, have reached out to their clients beforehand. Again, this is part of running your business. Don't get shocked. There's a rule in our business as an accountant, and I think many people would do well to remember this rule in your everyday business, and that is no surprises. As much as possible, try to make sure that the client isn't shocked by a tax return that you give them that shows they owe $500,000. Make sure you did the work all throughout the year to make sure they're aware of what's going to happen at the end of the year on certain types of investments and profits, etc. Similarly, with your tenants, you should have already had these conversations about what's going to happen today. So we'll see in May how many of the residential will come back as not paying. But our advisory would be the same as it is with our commercial property owners, and that is see what programs you can avail yourself of, okay, first and foremost. See what programs your tenants can avail themselves of, and why not be part of the solution with them to help them find any types of benefit programs that could conceivably go towards rent. Third, take a look at whether or not this is a property you want to keep holding anyway, right? Is this maybe a kick in your butt to get rid of that property that never cash flowed from the start? Maybe it's time to start reconsidering whether these are types of properties you should be getting rid of. If you're asking specifically about how do you deal with no cash and unable to pay your bills, well, clearly you got to find money from somewhere, okay? And that's going to be your decision at this point, is whether or not there are programs to tie you through because it's a property worth holding, or this is a property I got to get rid of anyway. Maybe now's a good time to see if I can get, like Kyle said, 97% asking or whatever the current rates are going to be, which I am absolutely convinced are going to go down in the next few months. If we talk from macro to microeconomics, on the macro scale, there is suffering, okay? Beijing is suffering macro, and these things will eventually funnel down. They can't not funnel down. So properties will decrease. If you're thinking of selling, now would be a good time maybe to put it on the market.
I like it. We were saying that like over the last couple of months as well, is if you're getting tight on cash, or if you want to be more liquid to take advantage of whatever comes, if it does come in the next year, let's say, sell the runt of the portfolio, right? That one that, like Dave was just saying, the one that might not be cash flowing as is already, and it's appreciation play, or maybe you have one that's high in equity that only cash flows a couple $100 a month. Throw it out there, get 97% of the value on it, and sell high, buy low, right? That's kind of the investor game, right? You make your money on your buy a lot of times, but if you want to put money in the bank, you got to sell something. And Victoria's, it's going to be really interesting. I'm a geek for economics. I love it. Randy and I were just chatting about this just a couple of days ago, because we got this flip that we got to figure out what to do with. It's going to be very micro based, right? There's that macro level of globe, North America, Canada, provincial, and then you get into the micro pieces of where you're actually sitting in or investing in. And so Victoria economics is going to be different than Duncan or Nanaimo or Comox or Toronto or whatever. And so getting to speak to the professionals in your space that know that market inside and out, I think is step one, right? To figure out what's going to happen and be on the pulse of things. And then it's going to affect Victoria differently than Vancouver, and Vancouver differently than Toronto, etc. But I'm ramping up like our our investors right now and our activity level into the marketplace right now, and we're just about to launch a marketing campaign to focus on finding these types of deals. And I think that's something that people should be ready to jump onto.
Steve, can I add one last thing? Sorry, quickly, just jump ahead of you, Kyle. There are people who are being really creative now, I'm seeing, with their rental properties. For instance, Airbnb owners who are suffering without a doubt right now. We have a client who was previously renting for Airbnb, has now turned it into 2-week rentals. Why 2 weeks? Because that's the quarantine period for returning to the country. And you might say, well, I don't want people who potentially have COVID staying at my residence. Well, if you were Airbnb owning anyway, you probably wouldn't know. And by the way, all of us who are owning Airbnbs need to make that the new normal, that you absolutely disinfect your property once your other tenant leaves anyway. Okay, but just the fact that people are getting creative if their normal revenue stream isn't there, I think is one of the great outcomes of this whole thing in so many ways. Sorry, Kyle.
No, Dave, that's a great point. And yeah, I'm dealing with my Airbnb clients as well. And yeah, they're all trying to pivot. And there's nurses, there's nurses that are moving around right now for work, and they need to be away from their families because they can't go and work in the hospital and come home to maybe, family members at home. So there's lots of opportunities right now for different types of stays. I think I was just going to say, going back to what Megan and Dave were talking about earlier about jumping in, is right now there's that unique opportunity. We're getting more comfortable. I'm wearing gloves and a mask for most of my showings, and my clients that are becoming more comfortable with that now that we understand what COVID is and how to protect yourself. If you're comfortable, throwing a mask on and going and looking at a few properties right now, once you've obviously vetted them online as much as possible. But I think even right now in the short term, there still could be some opportunities if you're willing to kind of dive in, go try to find some deals right now as well. Because some clients I've said, okay, well, we can go look at the home, but we got to wear gloves and a mask, and you need to sign this acknowledgement form and waiver. They're like, I'm good. I'll wait it out another month. And so if you're willing to take that opportunity and just realize that we're working under a new normal, then there could be opportunities as well. And if you're wanting to buy something, I think get out there as soon as possible.
Mm-hmm. Yeah. Start here, talk to your accountant and your financial advisor, and then go right here and talk to your local pro and start finding some deals, right?
Yeah.
And just so you guys are aware, Steve and I just listed a property last week, and we had over 11 people come through for showings. So that's a pretty big number right now. Obviously, it's a very hot property. It was a rancher up in Duncan, and it's a very hot property right now. But we did the full walkthrough, 3D walkthroughs and everything like that, so everyone can see the property. The requirement was they had to do the video walkthrough before they could get a showing, and then they booked a showing, and we had 11 people come through in 1 week for a showing. And we still have more people that want to come look, but we have an accepted offer that was $10K above list price in a multiple offer in the middle of a pandemic. So we literally just experienced it all. And we went from thinking we were going to, have to flog the property out and take a loss on it. And we're ending up coming out with a multiple offer, 10K above list, and had some massive attention on the property. So don't think that the world's coming to an end just because what the media is telling you and things like that. There's a lot of traction out there. There's a lot of people, and the people that are ready to buy are more serious now. You're not just getting the looky-loos that are coming through. So we might not be having 20 showings like we normally would, but we have 11 more serious people. So we can be a little bit more aggressive with our plays, saying, hey, we know you guys are serious. Do you want to put an offer? And we have some people that are coming to the table, and that's how we played it. It worked out very well for us. So don't be afraid to do that. And also know that if you are buying now, the people that are out there looking are pretty serious. So that's probably why there is a little bit more, I'll say, multiple offer type feeling right now, because the people that are looking, it's not like they're out there just shopping on Sunday saying, hey, if I find something, I'll do it. It's people that really want a deal or want to make something happen.
Yeah, good point, man.
Well, and the other challenge is there's just still no inventory. So sales, the April numbers have come in. Sales are down 58% to this time last year, but we're also, 30% less inventory as well. So there's still, like I said, people who I have clients who have been looking for a home for almost a year now, like for something pretty specific. And if something randomly pops up, some of them have to make that decision. But with the lack of available inventory, like your property and the ones that I've been dealing with the last week or so, some people are, especially if they're renting, like, why not get into your principal residence and live in it for the next 5 or 6 years? And, this will be so far in the rearview mirror that, but yeah, the lack of options is going to be an interesting factor as we move through the rest of the summer.
Yeah, which I think is just going to keep prices kind of as is.
Yeah, as Dave said, though, there's so many larger macro factors that will trickle down, but it's going to take time for this to unfold. And so I think every month we'll just have to keep tracking the data and kind of try to figure out where those curves are and where the best opportunities will come up.
And with regards to price, if you've got something, you certainly don't want that to go down in value. But this is why the model of our most successful residential property owners is and will continue to be cash flow, right? Because if you've got cash flow, and this, by the way, is what we've said has been the best hedge for retired people, is to invest in cash flowing things, not things that are spec based. Okay, so really, if there's going to be a downward turn in the asset values, aside from how much money you're going to be able to get out and put into something else by refinance, etc., you're probably not too worried, really, provided, of course, that people can pay their rents. There are two fundamental requirements that many people now have become more and more focused on. They are food and shelter, right? And I think so many of us had so many other ideas about things and wants and ego-based requirements for living that we have suddenly realized are not needed. But food and shelter now have become prominent in a way, and maybe it won't last, but have prominent in a way that they haven't been really for a number of years.
So true. It's such a real thing. All those $7 a month subscriptions are getting canceled real quick. I got a quick question for you, Megan. Obviously, on the life insurance side, it's becoming easier to qualify now in the sense that you might not have to go get all the blood work done and things like that, and you can DocuSign a lot of this stuff. What are the possibilities as investors looking at like leveraging a life insurance policy right now? If everyone's saying get cash available, is there an opportunity for someone that's maybe been paying into a life insurance for years or wants to get set up on one so that for future they can look at pulling some stuff out of those policies? Is there policies that work for that as investors with their life insurance?
Yeah, absolutely. There's whole life policies. There's different, I guess, more of the permanent type. They build up cash surrender value. So if someone has already had a policy, say their parents got it for them when they were born, and it's just kind of accumulated over the years, they likely have a significant amount accumulated within that policy, and it just serves as like a tax sheltered vehicle essentially within the policy until they do want to take out those funds. So they can either take out those funds by getting a loan through an institution, depending on what company provided that insurance policy. There's a bunch of different ones that can offer those type of loans. So that can be a great option if you do want to find, I guess, some liquidity to go branch into the real estate. It's also a good option right now in terms of like an alternate asset class, because a lot of people are really concerned about obviously the downside risk. We don't know what's coming. There's a recession coming, but we don't know in terms of how much that's going to impact our portfolios in the markets. So it can be a good option for people looking for an alternate asset class there. Because again, it can accumulate tax sheltered. They do pay either annual dividends, or there's some portfolios that they can be invested in depending on how active a person wants to be with that type of policy. So again, those policies will accumulate, and if they want to, again, down the road, they can either use it to fund retirement, they can use it to fund real estate transactions, or use it as leverage to borrow again. So there's definitely some different opportunities / options out there that I've had a lot of inquiries about since all this has happened, just people being really concerned about what's going to happen over the next few years in terms of returns. So it's definitely been a conversation to be had, and it just depends on the person's portfolio now and what their future goals are, if it makes sense for them.
Yeah, I think it's super important for people to understand this concept because so many people forget that their life insurance policies can be leveraged, or there can be some equity there. You can even pay yourselves in essence of way of tax-free shelters of salaries and things like that, of borrowing money. So there's a lot of cool creative stuff you can do inside your life insurance policies. And this is why it's more important than ever now to get in touch with people like Megan, Kyle, and Dave. The information that's been provided today might have blown over your head, but these are the experts in the industry, and why we bring them in is so that you can go and say, hey, Megan, you mentioned something about a life insurance policy that I might be able to leverage, or I might be able to do this for the future. Hey, you said something about maybe setting my kid up on one so that they can have it when they're my age and not have to worry about this kind of stuff. Can you tell me about that? And that's the whole point. You don't need to understand it now, but getting in touch with these people to learn what you want to learn is the important part and why we set up these calls.
Megan, I have a question for you. Two parts. So have you been worked with any clients that get life insurance in their corporation?
Yes, I have a number of them actually.
Good.
Yeah.
And have you, as part of the planning you're doing with them, to be able to leverage so their corporation can use that money to be able to invest in real estate? So instead of owning a project in their personal name, maybe they can invest through the corp using the life insurance as collateral. Have you done that kind of thing?
Yeah, I've actually, some of the contacts that I've met through the REINVESTORS, because they are active real estate investors, that's been a part of our planning process. So a lot of them are just out of their regular occupations have corp set up for whatever business they may be, whether it's construction or lawyers having like a personal law corp. And it's a whole part of the holistic, I guess, planning process, looking at how we can utilize some of those things, both as the alternate asset class, and then to be able to like immediate financing arrangements. So there's a lot of different options that can be available if that's your structure. And I feel like people that do have the corps, they have some broader options than maybe individuals that are just an employee.
Well put, broader options, absolutely. And at the start, I didn't quite catch, you said that you undertook this recent development as a partnership, but then I heard you say you're using a corporation, someone else is using a corp. How exactly is it structured between the two of you?
I don't own shares, so we're both on the title of the land that we own, because we purchased the land outright, and then we're both on the construction financing. In terms of we just got a joint venture agreement that says that the proceeds will be paid out to, like, when the sale will be paid out to her corp, which will be split 50-50 for the profitability with my corp.
So it's a joint venture that you did that way, is that it? Okay, good.
Mm-hmm.
Excellent, thank you.
Were you building multifamily there, Megan? Sorry, I think I missed at the beginning.
No, they're not multifamily.
Oh, okay,
Single family, yeah.
nice.
I have an interesting conversation I just had with a client about scaling up that many of your clients your members, Randy and Steve, might be interested to hear about. But this is a person who fairly well known in industry, at least in the real estate industry, for taking single family homes and turning them into duplexes and triplexes. And he does it in Ontario, and he's been in the magazines and stuff talking about it. And the interesting thing was he did his first 4 and he made $160,000 from his first 4. So take a single, turn it into duplex, triplex, what have you. It took him another 12. So do 4 in a year and I'm making 160,000. He figured if I do 8, I'll make 320. If I do 12, it wasn't until after he exceeded his 12th in a year that he actually got back to making $160,000 in a year again. Okay, so this is something that people don't understand, that scalability doesn't work, that suddenly, because, and the reason this came up, by the way, was he was saying about his accounting bill. How did my accounting bill get so high, right? And we said, well, we started with 4 properties and now you're doing 60 or whatever you're doing. It's the work is, and this is something you don't realize necessarily. And that goes true for every single expenditure. and the amount of time involved. And his point was, I might as well have not even bothered going off and trying to scale, because all I'm doing is working harder for the same amount of money. So any type of scalability you want to do really needs a very thorough understanding of your business, okay? And also a really good plan that's cost-based and has projections that are not just drawn on the back of a napkin, okay?
Yeah, great point, David. I appreciate that. I appreciate all you guys. I think we've got a lot of value out of this. Really appreciate your guys' time. As just a closing thought, I think everybody on this call is going to get a few additional phone calls this coming week from just people watching this. And so if you're out there watching this and you're like, sweet, I got to talk to Dave about getting that 40K for the 10 corps that I have, make sure you're also talking to Megan too, so that you guys can walk hand in hand together to have that whole strategy kind of figured out on what you want to do moving forward, and find your money down here, and then talk to these guys on where to put it next in local real estate, and yeah. So any kind of closing thoughts? I just want to open up the mic real quick and say any closing pieces.
I had a question for Kyle really quickly.
Yep.
How do you think that there's going to be a little bit more room for flip potential in the future?
I think
Here,
it will.
local?
It will again come down to the product, right? So I think if you're flipping and creating stuff that will still be attainable for those local incomes, right? Talking about those hyper local people, like who will still have a good stable job when we get out of this, who will still be able to buy. So it will be the investors. So if you're flipping and creating something that could be a good investment, I think there'll be opportunity. If you're flipping and creating, if you were taking, say, an old house and turning it into 5 strata units, like there could be a good opportunity there, because those 5 condo units will be popular. So I think whatever you're flipping into has to be something that will fit the new market as we go forward. That makes sense?
Yeah.
Yeah.
Finding something like
Ideas.
around the core area at like 650 unsuited, and then you add 100K into a suite, and then you're under that 900 mark for going in the core. That's 2 suites.
Yeah, and even looking at my realtor groups that I'm in, there's still demand for certain types of homes in the West Shore. So I think what you want to do is go in and analyze, and where is there a lack of available product. And so if there's a lack of homes with a suite in the core, or ranchers in Duncan.
What are you seeing from those realtor groups is like that core demand, like what people are wanting and they can't find?
It's single family homes at various price points. That's the long-term dream of everyone is to own a single family home. So it's just the varying price points. And some of those people, unfortunately, sometimes we see realtor post, I have got clients, they want a single family home in this neighborhood under X, and you're like, well, that's not even available. That's not even possible anymore. So some of that is a lesson that those buyers have to learn, but it's generally been around the single family home. And I think it's interesting with COVID, because I think you might see more multi-generational families living together, even at the same time of, that's maybe not the best health-wise. People's budgets are going to get tighter, and maybe you buy a home and you put your parents in the suite kind of thing. And so again, they might have to downsize, and then the kids are trying to upsize. And so fitting those different criteria.
When you say single family home, you're meaning without a suite, or it could mostly with suites?
It generally with suites because of the financing, the requirement, and be able to afford. But I'm seeing also older people. So this is the interesting thing with the tenant situation right now, is the older people that maybe have equity and money, they don't want a suite. And I'm hearing from some people saying, I don't want to deal with tenants. Mm-hmm. I just want a nice single family home that I can live in. So there's two kind of different, the young people need a suite, and the older people are scared of tenants right now. Yeah.
I think the other part too that you could look into is Airbnbs, right? If you believe in Victoria's tourism coming back next summer or the summer after, or something like that, and can hold that cost for 2 years, then go find yourself an Airbnb that's within those 12 or 14 buildings that's previously transient zoned. Pick it up at 70, 80 cents on the dollar, wait it out for 2 years, and I would bet anyways that in 2 years, travel should be back 70-80%, ish,
Yeah.
To Victoria. And then, it's a little bit longer term flip, but definitely doable.
No, yeah, and the opportunity for great cash flow once Airbnbs are rolling again will be a good opportunity.
Mm-hmm.
My only tip was you talked about connecting with Dave and Megan. I always tell people, especially investors, is before they even come see me, talk to Megan, talk to guys like Dave, talk to the Kyle, Dave, and Megan. Those should be your first 3 conversations before you even come to me and say, well, where should I buy? What type of property? If your financials aren't set up, and I always tell people life insurance, and Megan, you had a great session the other day on real mortgage insurance. Those are such important aspects that they get so caught up in the sexiness of looking at property and buying it and running those things. But if their taxes aren't in order or their financials aren't in order to make this work and be the most efficient, then I can only give you so much help. But people can get really burned on the back end, like Dave was saying. So talk to those guys first, especially if you want to do this seriously.
Cool. Dave, any parting thoughts?
My only parting thought would be to re-echo what I said earlier, which is I think this is going to be one of the most creative periods that I'll ever see in my lifetime. And out of this is going to come so many great things, and there might be different things. It is contemporary with a period that is fraught with anxiety and fear to a level that is unlike anything I'll ever experience again. And I think part of the recovery has to be for all of us to not downplay the fear. I mean, just outside, this is Highway 7 here in Markham, just down the street, there are 10 people on ventilators at Markham Stouffville Hospital, right? So it's real, but it has to be a measured type of understanding that this fear is not real. Okay, we put people ahead of profits, yes, but we still have to get out and live our lives with this thing that's with us, and it is not going to affect everybody. It's not going to kill everybody. We've just got to be creative about how we're going to run our businesses and try to follow Randy and Steve's lead as much as possible. These are guys that go with the flow and are always positive and seeing the bright side of things. So that would be the only thing I'd echo, which is more of kind of a platitude, I guess, than it is business advice. But it's a hope for the future and an optimism.
Yeah, and the only reason that we're in that position is because we get to talk with you guys on a regular basis. But I think creativity is absolutely key, like even more now than ever. Like we've always said, you can't just go find a deal, you have to create a deal. And especially going into the next year, I think it's profoundly the thing that has to be done. And for us, something that I'm actively doing is just reaching out to a whole bunch of random people. And there's lots of different groups, like there's ours, there's groups all across Canada. And I'm reaching out, following different threads that I'm interested in on Facebook posts and stuff, and I'm asking questions often. And if people who are commenting on those questions and stuff, I'm reaching out to them privately and just asking for a private conversation for 20 minutes, half an hour, just because I think there's a lot of value of learning other people's pain points and creativity. And so if I can learn something from Randy or Megan or Kyle or you, Dave, on a particular issue that you did in Ontario that I might be able to get creative with here in BC, that conversation might just lead to new thoughts and ideas for both of us to be able to execute. And so I think networking is really, really powerful right now, and we all have the time and space for it too, pretty much now more than ever. So I know there's a lot of people doing Zooms like this. Set it up individually. Zoom is free for 40 minutes, and so you can just set up a virtual coffee date and keep active in that space. And again, now more than ever, I think it's going to be the people who can act fast are going to get those good deals, because when those good deals hit the market or even pre-market, they're going to zip off the shelf because there's people like us that are all active in that space and wanting those deals. So if you can get liquid quick and get pre-qualified, talk to all the experts in the space we got on this call here today, and be ready. I think that's going to be huge. And don't stop the education train either. Start learning about creative financing and ways to put deals together. Start pushing your boundaries. If you've done condos or single families, or you've done flips before, looking at the cash flow side of things. We're constantly pushing boundaries into the development side of things now, along with Megan. So just keep on it. Don't get discouraged. Have that optimism. Do whatever you can to keep that optimism high and your health high, whether that's exercising, networking. Always, like, I'm a people person. I think most people on this call are people person. So we love talking and we get that energy from it. So find those areas that you can find and create your own energy, and stay riding that high life and being positive and whatnot. So one of the things that works for me is I got my Friday fun day shirt on, and it's almost weekend time. Hopefully the sun comes out so we can have a couple of pops in the field. And guys, thank you so much for being such a great piece of our community. We really, really appreciate it. I know you guys work hard for everybody in this community, and we've learned just tons from you all. And so I just want to say a huge thanks, and hope you guys keep well, and thanks for dropping the value, and have yourself an awesome rest of your Friday and a great long weekend. Or not long weekend, that's next week or something.
Isn't every weekend a long weekend right now?
Very true. Awesome, everybody. So let's wrap it up. I'll put everybody's contact in the thread, so that people watching this can get a hold of everybody. And looking forward to the next video, and stay tuned. We got some really fun stuff coming down the pipe for some really cool interviews. So have an awesome day, and thanks again for everything that you guys do for our community.
See you guys. Thanks for coming on.
Thanks, everyone.